Hi everyone, welcome back to Be Rich. It's me Vinod here, and as I had asked in the Instagram 52-week challenge, some video ideas, two things which came up which I can do by myself. Because Shashwat is busy today and Anand's not in town. I thought I will talk about one question which got voted up was what to do if I have some lump sum right now. That's a good question. What do you do if you have lump sum? And second question was how to buy bonds in India. Do a video about how to buy bonds. So I thought we can combine these two because if you have a lump sum, right, you can buy a good bond. That's what I would do. If I would buy a good bond and take that interest from that bond and I would invest it in the market because that will keep giving me my tiffin coffee kind of money. And it depends on of course, on the lump sum which you do have. But the reason why I would do that is it will keep my capital safe. Whatever that lump sum which I have, that is be safe and it doesn't erode. At the same time, whatever that earns from that can become something easy to sip with, so I don't have to change any of my monthly allotment of my salary, and I can use this to buy those shares which I'm looking at tiffin coffee range. So that's what I would do. And if you're scared of bonds and you're scared of stock market, then I would suggest you can always buy gold. You can buy gold ETF and keep it a lump sum. That way, against inflation, you don't lose anything. Of course, I'm taking into consideration, because that question really didn't elaborate, how long this lump sum can be locked away. If it's for a very short period, let's say it's less than a year, I would say just keep it as cash. Because if you need the money in entirety and within less than a year, keep it as cash. If it's, let's say, at least 3-4 years or more, then you can look at the avenues which I'm telling you about. Because even gold price fluctuates, like Anand said in a video, gold can also correct price. So if you buy gold at this all-time high or whatever, and it corrects, and you need to take the money out because your situation has come, you may lose some capital at that point in time, and you have to feel sorry about it. And bonds also, there's a set of issues in bonds which I'll get into now. Now, the types of bonds which you have in India is government bond, municipal bond, corporate bonds, foreign bonds. All these bonds, the types of bonds which are there. You have high-yielding bonds, and you have monthly income bonds, and you have PSU bonds, secured bonds, unsecured bonds. All these various types of bonds are there. Yes, you can buy these bonds on your Zerodha app and all these other apps. All you have to do is, there are lots of websites which you can easily Google and find out. One is like India Bonds, where you can go enter the name of the bond or search through bonds and find the code and go put that code in your Zerodha app. And if that bond is being traded and sold in that, you can definitely pick it up. But I would not advise you to do that. My advice would be to get yourself a good bond trader, a bond broker. Because the simple reason is, bond is like a fixed deposit, right? You put money into it, and sometimes you need to break your fixed deposit because you have a situation where you need that money in an urgency. So you need to pull that money out. In a fixed deposit, it's very easy to break, and you don't lose capital, and you get back the amount. All you might lose is your interest, which you'll have to forego and get your money back. So that is very easy in terms of fixed deposit. Bonds, in theory, are about the same. You're lending the money to an institution, financial institution usually. Financial institution could be like any one of your NBFCs. I don't want to name names. Then you guys think I'm trying to promote those bonds. I'm not promoting any names. Last time itself, for talking about a microfinance company, it got me into heaps of problems because though I kept saying, this is not a recommendation to buy or sell, people are interpreting these things like that as if I'm giving some secret signal here. I'm not. There are no secret signals here. I'm just giving you purely information, and what you choose to do with it is purely up to you. So as I was saying, so these are the most companies which issue bonds in India. In the corporate segments are finance companies. So they take your money, which is like an FD, and they in turn use it for their capital requirement, and they pay you an interest for it. There's no problem in all these companies if you're holding it to term. That means you wait for full maturity of the bond. You'll be getting your interest, if it's quarterly, monthly, or annually, depending on which kind of bond you bought. You'll be getting that interest, right? Once the date of maturity comes, capital will be returned back to you, and then it's done. So that's how it works. But what happens to most people who have bonds is, life happens, and you need to suddenly take the money out. And sometimes that bond, because the way the interest rate cycles move, you may not be able to sell the bond at the price which you bought it at, meaning you may not get it at the capital you paid. You might have to discount it because if there are bonds which are giving more returns, higher yielding bonds, or they're freely available in the market, and yours is a low yielding bond, you may have to discount it at that time. Or you need the money very urgently. There's nobody ready to buy it. So a third person might say, okay, I'll discount it and take it from you, and I'll hold on to it and I'll sell it when someone else comes. So that hurts. A lot of people, when they buy bonds, do not realize this, right? That yes, bond sellers will tell you, yes, you can easily sell it. It's very easy. Just like stocks, you can sell it and you can get your money back. I'm telling you from experience, it is not as easy as selling stocks, and you can't get your money back in entirety if you're not careful, right? This is the main reason I would not suggest that you go onto one of your apps like Zerodha or any one of these other apps and just buy the bonds, whatever you feel like it, and say, why do I need somebody? I know what I'm doing. Yes, you do know what you're doing, as long as you know truly what you're doing. If you do not know truly what you're doing, and you're doing this based on some videos you saw, some hearsay information, secondhand information from your friends, please do not do that. Go find yourself a good advisor. Find yourself a good bond broker. Because the reason why you're having a good, reliable bond broker is because the bond broker will have a pool of clients. And let's say you bought a bond from them. They'll be obligated to you, or they'll feel nice enough to you that when you come to them and say, see, I need to urgently get my cash back because there's a situation which I need the money for, he'll find another customer in his portfolio who'll be ready to pick up these bonds, or he'll be able to hold the bonds and release some funds to you, and something can be worked out where you do not lose your capital, where you may not have to discount it. The flip of it is, of course, you bought a high interest bond and the interest rates collapse, then of course you get to mark up and sell, and of course they can guide you on that too. So this is the main reason you should always have a reliable bond broker, and I cannot stress this more than this, saying why you need to have. But if you do want to venture out, you can. You can buy them via the platforms. So liquidity is always what you should keep in mind when you're buying these bonds. And you can research online if you don't want to use a bond broker to find out how liquid these bonds are. And most of that information is available, but I would not take on the risk, like I said. Other than that, the other things you need to keep on mind is understand how these bonds are priced. Okay, what is the interest rates of these bonds and the associated risks with these bonds. Bonds have risks such as secured, unsecured. I've done a previous video on this, so I don't want to dive into what is a secured bond, what is an unsecured bond. I'm sure Rupesh will link that old video somewhere or down below, and you guys can see that video where I talk about what a secured bond, unsecured bond is. So based on your risk profile and the type of bond, like how we invest in companies where we do research about the company and we understand the owner, same way you should do research on the company which is issuing the bond and the guys who are issuing it, the owners of this bond, who are running this company, and see if they're safe. And based on that, how we buy stocks, you should buy bonds. Similar kind of analysis should be done. And if you do not do this kind of analysis, there have been many bonds which in India have gone defunct, meaning the companies have gone belly up and they've not been, the people who invested in these bonds haven't got their money back. It does happen, like how shares, like our famous companies which have gone belly up in India, where investors did not get their money back. There are also bonds from institutions which have gone belly up and the investors did not get their bond money back. According to rule, Indian law, bond holders are supposed to get paid back first in terms of when a company goes bankrupt. But these things, you know how it works in India. So this is my basic thing when it comes to buying bonds. Make sure you have a good bond broker to educate you and tell you what exactly you're getting into before you get into it. Other than that, bonds are very good. And if you have lump sum, like I said in the beginning of the video, you can definitely put it in a bond and take the interest from the bond and deploy it into the stock market as different coffee ranges allow you to. Like today, the market has moved. And I think that as I'm recording this video, the market is down 0.5%. And lots of the companies usually take into consideration are moving on the negative side. So you can look at them. Some of them already moved negative and moved back to positive. So anyway, this is what I wanted to share with you today. So keep those questions coming on the 52-week challenge. I'll get another video done tomorrow with Shashwat about another question of yours. And I wish you a wonderful, pleasant day tomorrow because it's evening already. And I hope you had a wonderful day today. Thanks for watching the video. Do share this and pass it on to friends and family who might find this kind of content interesting. I'm looking forward to your comments down below about bonds. If you have any further questions, you can know how to reach me on Instagram or over here. And other than that, nothing else more. Thank you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.